EPK Capital presents Deep Dive on AMD. Picture this. A company that was trading for just $2 a decade ago is now worth over $150 per share, delivering a staggering 7,800% return to investors. That's not a cryptocurrency or some speculative tech startup. That's advanced micro devices, better known as AMD. Hello everyone, welcome to EPK Capital's Deep Dive video. In this series, we analyze one company each day based on the security analysis by Benjamin Graham. Today, we're diving deep into one of the most fascinating transformation stories in the semiconductor industry. Whether you're a seasoned investor or just starting your investment journey, this comprehensive analysis will give you everything you need to know about AMD stock. From its humble beginnings as a small logic chip manufacturer to its current position as a major force, challenging Intel and competing with NVIDIA in artificial intelligence, AMD's journey is nothing short of remarkable. But the question every investor wants answered is simple. Is AMD stock a buy, sell, or hold today? Let's find out together. The company and its promoters. Silicon Valley's David versus Goliath story. Advanced Micro Devices was founded on May 1, 1969, by Jerry Sanders III and 7 colleagues who left Fairchild Semiconductor to start their own venture. What began as a small company producing logic chips in Sunnyvale, California, has evolved into a global semiconductor powerhouse with over 26,000 employees and annual revenue exceeding $25 billion. Leadership that transformed everything. The most crucial chapter in AMD's story began in 2014 when Dr. Lisa Su took the helm as CEO. Su, a MIT-educated electrical engineer with a PhD, brought 20 years of experience from companies like IBM, Texas Instruments, and Freescale Semiconductor. Under her leadership, AMD has undergone one of the most dramatic corporate turnarounds in tech history. Dr. Su's transformation of AMD is legendary in Silicon Valley. When she became CEO, AMD was struggling to compete with Intel and was losing market share rapidly. Today, AMD has not only survived but thrived, with its server CPU market share growing from less than 1% in 2018 to approximately 21% by 2025. Her strategic vision and execution have earned her recognition as Time's CEO of the Year in 2024. What AMD actually does: AMD operates in 4 main business segments. 1. Data center, 48.8% of revenue. Server processors, EPYC, and AI accelerators. Instinct series. This is their fastest growing and most profitable segment. 2. Client, 27.4% of revenue. Desktop and laptop processors, Ryzen series for consumer PCs. 3. Gaming, 10.1% of revenue. Graphics cards, Radeon, and semi-custom chips for game consoles. 4. Embedded, 13.8% of revenue. Specialized processors for automotive, industrial, and other specialized applications. The company's strategy revolves around providing high-performance computing solutions that compete directly with Intel in CPUs and NVIDIA in GPUs, often at more attractive price points. 10-year financial analysis. From near bankruptcy to billion-dollar beast. Let me walk you through AMD's incredible financial transformation over the past decade, and trust me, these numbers will surprise you. Revenue growth, the compound effect. Starting from around $4 billion in revenue in 2015, AMD has grown to over $25 billion in 2024. That's more than a 6-fold increase. But this wasn't a smooth ride. The company experienced significant volatility, with revenue declining in some years before the explosive growth of recent years. Here's the year-by-year revenue story. 2015-2019, steady recovery from 4B to 6.7B. 2020, breakthrough year reaching 9.8B, plus 45% growth. 2021, explosive growth to 16.4B, plus 68% growth. 2022, peak at 23.6B, plus 44% growth. 2023, slight decline to 22.7B, 4% growth. 2024, recovery to 25.8B, plus 14% growth. Profitability from losses to billions. The profit transformation is even more dramatic. AMD went from losing money consistently to generating over $3 billion in net income at its peak in 2021. Even after some moderation, the company earned $1.6 billion in net income in 2024, demonstrating sustainable profitability. The gross margins tell a compelling story. 2020, 44.5%, 2021, 48.3%, 2022, 51.1%, 2023, 50.3%, 2024, 53.0%. These improving margins reflect AMD's shift toward higher value products, particularly in data centers and AI applications. Debt management, a clean balance sheet. One of AMD's greatest strengths is its excellent financial health. The company has transformed from a debt-heavy operation to having more cash than debt. Total debt, $3.2 billion. Cash and short-term investments, $5.9 billion. Debt-to-equity ratio, just 5.4%. This strong balance sheet gives AMD tremendous flexibility to invest in R&D, make strategic acquisitions, and weather economic downturns. Return metrics, efficiency improving. While AMD's return on assets, ROA, and return on equity, ROE, have moderated from their 2021 peaks, they remain healthy. ROA, 2.4%, 2024. ROE, 2.9%, 2024. These metrics reflect a company that's efficiently generating returns for shareholders, though not at the unsustainable levels seen during the peak growth years. Stock chart. Technical analysis. What the charts are telling us. Looking at AMD's 10-year stock chart is like watching one of the greatest comeback stories in market history. The incredible journey. From September 2015 to September 2025, AMD stock delivered a mind-blowing 7,137% return, turning every $1,000 investment into over $79,000. That represents an annualized return of 54.9%. Absolutely extraordinary by any measure. Key technical levels based on our analysis of the price data. All-time high, 227.30, reached in March 2024. All-time low, 165, September 2015. Current price, 159.54. 52-week high, 186.65. 52-week low, 76.48. Current technical picture. As of our analysis, AMD is showing mixed technical signals. Long-term bullish. Price remains well above the 200-day moving average, 125.95. Short-term consolidation. Price slightly below the 50-day moving average, $161.85. Golden cross intact. The 50-day average remains above the 200-day average, a traditionally bullish signal. Volatility. High at 52% annualized, typical for a growth tech stock. The stock is currently trading about 30% below its all-time high, which could represent either a buying opportunity or a sign of fundamental challenges. That's what makes analysis so important. Performance patterns. AMD has shown extreme year-to-year volatility. Best year, plus 309% in 2016. Worst year, 57% in 2022. Recent performance, plus 32% year-to-date in 2025, plus 61% over the last 90 days. This volatility is both a risk and an opportunity depending on your investment timeline and risk tolerance. Benjamin Graham. Valuation. Is AMD undervalued or overvalued? Now let's apply the father of value investing's methodology to see if AMD represents good value at current prices. Graham's formula applied to AMD. Using Benjamin Graham's revised intrinsic value formula, we get an intrinsic value of $103.16, hence Graham's verdict overvalued. At the current price of $159.54, AMD is trading at a significant premium to Graham's calculated intrinsic value. According to this traditional value investing approach, the stock appears overvalued by approximately 55%. Why Graham's formula may not tell the whole story. However, it's crucial to understand that Graham's formula was designed for mature, stable companies, not high-growth technology firms experiencing rapid transformation. AMD's current situation presents several challenges to traditional valuation. 1. Rapid growth phase. AMD is in a period of explosive growth in AI and data center markets that Graham's formula doesn't fully capture. 2. Market disruption. The company is gaining market share in multiple segments simultaneously. 3. Technology moats. AMD's technological advantages in certain areas may justify premium valuations. Modern valuation perspective, looking at more contemporary metrics. P/E ratio, 94.8x, expensive but declining as earnings grow. PEG ratio, 0.83, suggests reasonable value when accounting for growth. Price to sales, 8.9x, high but justified by improving margins. Forward, PEE, 31.6x, much more reasonable based on projected earnings. The forward-looking metrics suggest that while AMD appears expensive on current earnings, it may be reasonably valued when considering future growth prospects. Pros versus cons. The bull and bear cases for AMD. The bull case, why AMD could soar higher. 1. AI revolution leadership. AMD is positioned as the primary alternative to NVIDIA in the exploding AI market. With AI chip demand expected to grow exponentially, AMD's MI350 and MI400 series could capture significant market share. The company's ROCm software platform is closing the gap with NVIDIA's CUDA ecosystem. 2. Data center dominance. AMD's EPYC server processors now hold over 20% market share, up from less than 1% in 2018. With Intel struggling with manufacturing challenges and leadership instability, AMD has a clear path to 40% plus server market share by 2026. 3. Strategic acquisitions paying off. The $49 billion Xilinx acquisition is delivering results, expanding AMD's addressable market in adaptive computing and FPGAs. This positions AMD for growth in automotive, industrial, and edge AI applications. 4. Excellent financial health. Strong balance sheet with more cash than debt provides flexibility for R&D investment and strategic moves. Free cash flow generation supports continued innovation. 5. Proven leadership. Lisa Su's track record of execution and strategic vision gives investors confidence in the company's ability to capitalize on market opportunities. The bear case, why caution is warranted. 1. Valuation concerns. At 95x trailing PE, AMD is undeniably expensive. Any disappointment in growth could lead to significant multiple compression. 2. Intense competition. NVIDIA maintains overwhelming dominance in AI GPUs with 94% market share. Intel is fighting back with new products, and other competitors are emerging. Market share gains are not guaranteed. 3. Cyclical industry. Semiconductor markets are notoriously cyclical. The current AI boom could face a downturn, impacting demand for AMD's high-end products. 4. Geopolitical risks. Export restrictions to China have already impacted AMD's business, with the company losing approximately $800 million in Q2 2025 due to export controls. Further restrictions could limit growth. 5. Execution risk. AMD must continue flawless execution across multiple product lines simultaneously. Any misstep in CPU, GPU, or AI chip development could hurt competitive position. 6. Margin pressure. Aggressive pricing to gain market share could pressure the improving gross margins that investors have come to expect. Important checks, controversies, and global position. Regulatory and compliance issues. AMD has largely avoided the major scandals that have plagued other tech companies. The company maintains strong corporate governance practices and has not faced significant regulatory penalties or controversies in recent years. The primary regulatory challenge facing AMD is the ongoing US-China trade tensions. The company must navigate complex export control regulations, which have already impacted its AI chip sales to China. However, AMD is working with the U.S. Department of Commerce to secure necessary licenses. Global market position. AMD's competitive position varies significantly across different markets. CPU market, strong and improving. Desktop, US's 30% market share and growing. Server, Shuar 21% market share, rapidly gaining ground on Intel. Laptop, steady growth in premium segments. GPU market, challenging but opportunities exist. Gaming, solid position but trailing NVIDIA. AI data center, distant second to NVIDIA but growing rapidly. Overall discrete GPU market, just our 6% share, NVIDIA dominates with 94%. Manufacturing strategy. Unlike Intel, AMD uses a fabless model, partnering with TSMC for manufacturing. This provides access to cutting-edge process technology without the massive capital requirements of owning fabs. Innovation and patents. AMD maintains a robust R&D program, spending over $6.4 billion annually on research and development. The company holds thousands of patents and licenses, providing competitive moats in key technologies. Conclusion: weighing the risks and rewards. After this comprehensive analysis, AMD presents a fascinating investment case that embodies both tremendous opportunity and significant risk. The investment thesis: AMD is essentially a leveraged bet on several major technology trends. 1. The continued growth of cloud computing and data centers. 2. The artificial intelligence revolution. 3. The ongoing digital transformation across industries. 4. The potential decline of Intel's dominance. The company has successfully transformed from a struggling challenger to a legitimate competitor with industry-leading products. Under Lisa Su's leadership, AMD has consistently exceeded expectations and gained market share across multiple segments. The valuation challenge. However, much of this success appears priced into the stock. Traditional valuation metrics suggest AMD is expensive, though growth investors might argue this is justified given the company's positioning in high-growth markets. Risk-reward assessment. For aggressive growth investors with long-time horizons, AMD offers compelling exposure to the AI and data center megatrends. The company's strong balance sheet and proven management provide confidence in its ability to execute. For value-conscious investors, the current valuation may be concerning. Waiting for a better entry point during market volatility might be prudent. For income-focused investors, AMD doesn't pay a dividend and may not be suitable for those seeking current income. Final thoughts. AMD represents one of the semiconductor industry's greatest turnaround stories, but investors must carefully consider whether future growth justifies the current premium valuation. The company's success will ultimately depend on its ability to continue gaining market share in an intensely competitive industry, while maintaining the innovation pace required to stay relevant. Important disclaimer: this analysis is for educational and informational purposes only and should not be considered personalized investment advice. All investments carry risk, including the potential for loss of principal. Past performance does not guarantee future results. The semiconductor industry is particularly volatile and cyclical, and individual stocks can experience significant price swings. Before making any investment decisions, please consult with a qualified financial advisor who can assess your individual financial situation, risk tolerance, and investment objectives. Consider your own research and due diligence, and never invest more than you can afford to lose. The author may or may not hold positions in the securities mentioned. And that's all we had for this video. Thanks for watching. If you found this video valuable, please hit the like button, subscribe to our channel, and let us know in the comments which company you'd like us to analyze next.